In this video, I'm going to show you how to create your own trading strategy. Firstly, the first thing that you need to do is to do your own research. Do your own research. There's Google. You can still find some resourceful information over the internet if you search the relevant content. So the first thing that you need to do, obviously, is to do your own research. And then on the second one, you have to find what you feel comfortable with. It might be harmonic patterns, it might be wave trading, it might be smart money concept, or even trading indicators. But here, this is going to be the confusing part of your research, because this is not the easiest one here. Because if you're starting out, this might be a little bit difficult for you to find information properly, because most of you guys, we all know that we started from here on indicators. Even when you open your MetaTrader 4 for the first time, you'll find an indicator plotted on your charts already. So you just have to remove that thing unless if the indicator is benefiting you in your trading style. So for those who might be wondering what is harmonic patterns, is those things like butterflies and so forth. You might have seen it before. It looks something like this. Obviously, when you start to learn wave trading, if you start from here, wave trading will be easier because you will understand the basics and the advanced way to use Fibonacci extensions and retracement. That's where I started before. I started with harmonic patterns, then wave trading, smart money concept, indicators. Obviously, I started there first, but this also include learning candlesticks patterns. And then when we move on to the trading strategy. You will build your own trading strategy based on the research that you have found. But before you can even use your real money, you have to firstly backtest that strategy. But for me, it came in a different way. For me, my trading strategy is candlesticks, patterns, wave trading, and smart money concept. This is my trading strategy. I use candlesticks, I use wave trading, and then I use smart money concept. And then for candlesticks, I use them for entry and analysis. Wave trading, I use it for analysis and take profit levels. Smart money concept, I use it for entry, analysis, and take profit. And then after this, obviously, I had to backtest. You have to work hard here, very, very hard, so that you can train your brain to adjust to new things and combining new things. You might be wondering, how did I combine these three trading theories or concepts? Let me show you how. The first thing that I did when I started to trade, I used to trade like this. I would wait for the bearish trend line to be broken around here, then wait for price to make a correction like this, and then enter the market around here when price breaks to the upside. But as you can see, there's something wrong here. The risk to reward is very small here, and the stop loss is also huge. And sometimes I realize that sometimes the market will come and break to the upside and then come lower and stop me out and then move to the anticipated direction of the market. Then I realized that there's something wrong with this. I tried so hard. Let me show you. I tried so hard to improve it. Then I tried to enter on the third leg after price has made the third leg here. Then I will enter on the breakout of this, put my stop loss above, and you can see now that the risk has reduced. So after price is broken down here, it will eventually break to the downside. And my take profit levels were around this area here. But imagine entering the trade around here and then taking profit very early. So I knew that I had to change something. I need something that can make me to enter around these areas before the breakout, because I already know that the market, when it breaks, it might eventually move or retrace back. So then I started to learn smart money concept. Obviously, I see a lot of people are using it nowadays, but they don't tell you the truth about trading because they just want to show you only the profits only. So after learning smart money concept, I started to see fair value gaps, supply and demand zones on the market, the things that I didn't see before based on the price action. So then I decided to make my analysis even better after learning smart money concept, because I already knew alot wave. It can show me where the reversals are in the market, but I still have to wait for the market to break out. You see, that is a waste of time and money. So then I decided to improve my own trading strategy after combining a lot of things. So after learning smart money concept, I realized that, okay, here, most of the time, you'll find a fair value gap. Then I would try to enter here. But there was a problem entering here. how would I know if the market is going to turn around this area without making this low first? That's when I realized that I need to confirm my trades around these areas here. And then I finally discovered what I call a confirmation candle. I will show you that during the video. So after entering here, the market will break to the upside. So right now, there's a correction here. But this correction, I don't want to enter around these areas anymore. What can I do? So obviously, after learning smart money concept, I realized that there will be a fair value gap around this area and then a demand zone. So a confirmation here. So that means I will have one trade and then the second trade around this area. So this time, as you can see, I'm not doing something like this before. Right now, it's something like this. Take profit will be the same because I use Fibonacci extensions for my take profit levels. So as you can see, something has changed into my trading style. So for the point of this video is that you do not have to rely only on one trading theory or discoveries or whatsoever. If you know something that has benefited you before, you can still try to improve it and make it better over time and make your own trading style, because we all trade differently and manage our trades differently. Even if you are using signals, you know very well that the person behind those signals manages their trades properly more than you do, even if they send you the signal though. They can say enter now while they're in the trade already. So let's move on. So now, because I already know Elliott wave or wave trading, can call it whatever you want, it's fine. If I see a price action that has already broken to the downside, I will know that this move has to be impulsive. This one here, the one that broke the trend line and even the structure here. And then the next move around this area has to be corrective, has to be very slow. If this area took around, let me say, if this area took around 5 days to move to the downside, that means this one has to be more than 5 days to move to the upside before we can start to enter the market. From here, right now, I already know fair value gaps. So that means I'll wait for a fair value gap, wait for my confirmation candle here, put my stop loss around this area. Because I already know how to make a take profit level with using this structure alone. My take profit level will be lower. I won't even try to target the previous lows here, because Elliott wave has helped me to make better take profits levels than smart money. Smart money concept take profits are very low, are very weak in my opinion, and don't try to judge me. And then for Elliott wave, I would know that this is the first wave, this one is the second one. So I would wait for the market to create something like this. Let me show you on the side. This is your first wave, one. This is your second wave. This one has to be a correction here. Then the market will move like this, make a correction. This is your third wave, and then a retracement to the fourth wave finally before we can see a full impulsive wave. And then after this impulsive wave, obviously we will have a correction around this area, and then is when you can try to enter even more, chasing the bigger wave around this section. This will be your second wave. This one here will be your first wave after you have completed everything. Let me just make it clear for you guys so that you can understand what I mean around this thing. It will be, let's say maybe we are in a bullish trend here. This is your bullish trend. We have something like this, 1, a 2, 3, a 4, and a 5. This will be your structure. And then even inside these moves here, you will also find the same impulsive waves like this, but this one will be below. Okay, this is how I combined Elliott wave and smart money concept using candlesticks. So let me try to show you a real example on a real chart. This is the current USD. It's the same thing. So I see that we have an impulse around this area and then a correction around this area. So that means the next move should be also impulsive. But during my old days, I will still have to wait for the market to make something like this. You will see it. Wait for the market to make a correction and then enter the market on a breakout. Put my stop loss here. Right now I can't even share with you how I make my take profit levels because it will make this video very long. So as you can see, the risk is very high. But after learning smart money concept, I have realized that right now, because I know what is a fair value gap, FVG around here, demand zone around here, So the next thing is to wait for the market to come to the zone and touch the demand zone and then close with a bullish candlestick. This one here. So right now my entries are like this. Put my stop loss below. And also I have made a lot of videos on how to improve the confirmation candles. You can check them in the description below. This bullish candlestick here that closes like this, obviously our entries will be on the open of this candle. If you check out that video, it will help you to understand how I even improved how I enter the market. You can see it's something like this one here. And so far guys, if you have realized in this video, I'm just talking because I just wanted something that is not fully scripted. So I just wanted to talk in a simple terms. So you can see it's something like this. This one is pretty much easier to understand. And in my opinion, this is the best setup in the market. The best one I've seen so far. And the take profit levels are very high. If you want to add a lot of things, you can also say that the market manipulated the previous low before it can break to the upside. You can say even here or even on this high here. Okay. You can see by using candlesticks and elliot wave can help you to be a better trader. So right now, let me try to find another example on a different. Even from this example, we can see that we have a trend line that is broken. Let's say if the market has already broken to the upside. This one is an impulse. This one is just a correction around this area. And then that means I have to wait for the market to break here with this candlestick. So that means right now the market will play around with us. But right now I don't enter like that anymore. I have to wait and see what the market is trying to do. This one is just a flat correction. You can see the market broke this trend line and then we have this correction here. This correction looks something like this. Is an impulse, we have a correction, and then we have another impulse, then we have a correction like this. But you can still enter based on the first correction. Even here, this is a full correction here. This one here is just a combination, and then we have another correction before the market can move to the upside. You can clearly see right now that everything has changed. My entries has changed right now. So on the first correction, you can see that we still have a fair value gap around this area, fair value gap here, and then we enter. But this one is very weak because we touched the zone, close with a huge bullish candlestick. That means we have to wait for another entry here. This one is very useless. But the market tried to come back again, but it didn't touch here. But if we zoom clearly, let me show you. If we zoom clearly or based on this candlesticks here, you will see something else. Let me remove this zone. Okay, we have another zone here. Price closed with a bullish engulfing candle here. Because we have improved our entry, we wait for this candlestick to close and then put our buy limit order around this area. Long position here and then something like this. So right now, I won't even have to wait for the market to break to the upside. If I entered on a breakout, it will be something like this on a breakout. Maybe wait for this candlestick to close, put my stop loss around here. You can see this is a major improvement into our trading style. But right now, the same take profit level will be huge. See, there's a difference here. There's two different types of traders here. This is me before, this is me right now. Because I know I had to improve something in my trading style. So let's try to find another one.
In our backtesting, we use Trader Edge, a dynamic backtesting software that revolutionizes strategy management. This platform excels in consolidating all your strategies in one place, saving you both time and money, while providing clarity on which strategy suits the current market conditions. With features like date tracking, it keeps you motivated and organized, allowing you to monitor your backtesting progress effectively. Trader Edge also offers forward testing capabilities for real-time scenario analysis. To enhance your trading efficiency, find the link in the description below.
This is an example on the USD 1 hour. Again, what I used to do was to do something like this, draw my trend line, wait for the market to break this trend line, and then wait for the breakout to the downside. But as you can see, this candlestick closed, opened, and then moved aggressively to the downside. So that means my entry could have been very late here. But there is something that we can fix around this area. We can do something like this. Right now, we have our supply zone on this area. We will wait for the market to come and touch this supply zone and then close with a bearish candlestick. So right now, as you can see, I am reducing the stop loss, increasing the take profit. This is how you should improve your own trading strategy. I'm not sure which strategy you are using. If you are using support and resistance, you can still try to improve it by including some trading strategies into it. Also, another thing that I want to point out is that the first thing that you need to do as you backtest is to master market structure. Because if you don't master market structure, everything will be difficult. You have to master market structure, guys. The old days, I knew that if this is a correction, the bigger correction here, the market is still moving to the upside. There is no need to enter the breakout and then put my stop loss here. No, right now, I have to scan the market in this area to see if the market still allow us to move to the upside. Let's see. We have a fair value gap here, but the market did not touch this fair value gap. So we avoid this because the market seems like it's still bullish. And then we have another correction like this, but there is a fair value gap around this area. So let's draw this demand zone. The market touched the zone, close with a bullish candlestick, and then we can place a buy limit order below the bullish candlestick, open or low. You will decide which one you want to choose, but you can still backtest what I'm teaching you today. You can also use the backtesting software that I have shown you. The link will be in the description below. And also, guys, don't forget to subscribe to the channel and like the video so far. Also, our Discord channel, our Discord server, the link is still in the description below. So let's move on to the last example before we end this video. And for those who doesn't know, this move here could have tricked a lot of people, making them to think that the market is still bullish. But always look for this previous moves and look for the current move. You can see this move is very fast. How about this one? It's very slow. And what is this thing here? Obviously, this is impulse. This one is just a correction, as I said before. So the next move will be impulsive. That is why you see that you are being stopped out very quickly after holding a trade for several days. Imagine entering here and then holding the move, thinking that you are still in profit, and then suddenly, boom, you are down. So my advice to you guys is that please go and learn Elliott wave so that you can understand the basics of impulse and corrections. So I guess I'll see you on the next one.